All right, welcome back to Financial Accounting in 5. In this video, I want to look at the question 4 that we have here on the calculation of net profit. So on this video, we are going to calculate the statement of changes in equity. That's where we are going to find that figure for net profit. So the question there is, the owner of Cox Traders informs you that no proper accounting records were maintained for the 2 financial years ended 20th February 2014 and 2015. He can, however, provide the following financial data. So this is data that we're given the balances of 2014 and 2015. So given that list of balances, let's try to see what we have beneath that. So all the required part now, 4.1.13, the owner requests you to draw up a financial statement to calculate his net profit for the year ended 20th February 2015. Bearing in mind that he had withdrawn 4,200 during the year. So we should take note. And then 4.1.2 is the only note required is that for equity. So according to this video, we are going to look on just only on 4.1.2, whereby we are going to prepare the statement of changes in equity. And that's where we're going to find the missing figure for net profit. So in this statement of changes in equity, we are going to use the layout of the formula that we are just going to put down so that we understand how we are going to go about it in the statement of changes in equity. Remember, when we say opening capital, we say it is when we say opening capital, we add our net profit. And if we have got any additional capital that has been introduced during the year, we are supposed to add it. And then we subtract drawings, you get your closing capital. So this is the formula that I'm going to employ so that we can find the figure for profit. But according to this question, we do not have additional capital. So we can just going to leave additional capital and say opening capital plus net profit. And then we less our drawings, and then we get your closing capital. So this is what we have. Then if you go to the question, let's try to find out if you have got opening capital and closing capital. And of course, the drawings figure we already been given there is 4,200. So we can go to the information that we have to see if we are given the figures for opening and closing capital. So if you go up, this is the list of balances. So we can go, this is going to be our opening capital column, and this one is our closing capital column. So remember, this is 2014, this is 2015. So if you go down the first column, you see that we do not have anything to do with capital. So it means it's not given. Then 2015 again, there's nothing, which means it's not given. So we are going to calculate the opening capital and the closing capital given the list of balances that we have. Remember, we are going to employ the accounting equation, which says assets is equals to capital plus liabilities. So the figure for capital is the one that we want. So we make it subject to the formula. It becomes capital is equals to assets minus liabilities. So basically, what we are going to do is we are going to list all the assets that we have in the list of balances, and you get the total. Add them, get the total, and then we also list all the liabilities that we have in the columns. We add them, get the total. Then we say the total for assets minus the total for liabilities. Then we get the capital figure for the opening balances and then the closing balances. So we go there. So what is important is for you to identify which one is an asset, which one is a liability first before we start to answer, before we start to add them. So we come here, we see that loan is on the first, it's a liability. Bank is an asset. If it's favorable, it's an asset, but if it's unfavorable, it becomes a liability. It will be a bank overdraft. So equipment and cost also is an asset. But for equipment, you know that the figure that we're going to consider is the carrying value. So we are going to say cost minus accumulated depreciation. Remember, to get your carrying value, you say your cost minus your accumulated depreciation. So we are going to subtract it from them. Then prepaid expense, again, it's an asset. Then accrued expense is a liability. Then investment is an asset. Debtors an asset. Creditors liability. Trading stock asset. Cash flow asset. So we are going to pick for the opening capital. We're going to pick all the assets. And then we add to get the total for assets. Then we do the same to liabilities, and then we subtract to get the figure for capital. So we can just come here and make the calculation by adding, grouping all the assets together and adding them so that we can get the total. So we are here. And we are just going to group them. So we are saying calculation of opening capital. So I will start by assets. we group them, and then we add them, we get the total. So if you come here now, for the opening assets, total of assets, we are going to say 2,878, which is for bank, plus 29,400, plus 2,360, plus 4,000, plus 15,620, plus 50,136, plus 1,500. Those are all the assets that we have for 2014. Then we go there, we just add them. We are saying 2,878 plus, then for the equipment we are saying 29,500 is the cost, and then we subtract the accumulated depletion, which is 8,159, so that we get the carrying value. Remember, we consider the carrying value in the balance sheet, and then we add 2,360, and then we add 4,000, and then we add 15,620 plus 50,136 plus 1,500. And then the total that you're supposed to get, it's 97,735. So this is total for assets in the opening capital column. Then we now add the liabilities. So the liabilities again, we go and check them. Liabilities, we are saying we now have liabilities. Loan, there's nothing, there's zero. So we are not going to put anything. We have accrued expense 6,450, and then we have got creditors 4,320. So that's what we are going to add there. So here we are saying 3,450, and then we add your 12,320. And then we are going to get your 15,735. Then we now have the total for assets and liabilities. Remember, we said we are going to say capital is equal to assets minus liability. So the total for assets, we have got 97,735. And then we subtract total for liabilities, 15,735. So we calculate it as such. There. If you subtract there, the answer that you're supposed to get is 82,000. You're supposed to get 82,000. So 82,000 becomes your opening capital. So this is your opening capital. Then as well, we can now calculate the closing capital. So on the calculation of closing capital, we are going to identify again the assets that we have first. We have 4,572, which is our bank, and then equipment. We are going to say 29,400 minus 11,345 to get the carrying value here. And then we also have our our accrued prepaid expenses for being an asset. And then from there, we go to investment. It's an asset. So we are saying these are assets that we have. We also have investment asset, and then we have data here assets, and then we have got our trading stock assets, and then cash flow assets. So for assets, I'm going to say 4,572 plus 29,400 plus 2,996 plus 4,000 plus 17,040 plus 64,080 plus 1,500. So we go there and summarize it as such. So here we are saying calculation of closing capital. So for calculation of closing capital, remember we are now saying 4,572. We add the carrying value, which is going to be 29,400 minus 11,345. And then the figure that we are going to get, we add 2,996, and then we add 4,000, and then we add 17,040, and then we add 64,080, and then we add 1,500. So we do as such. You'll see that the answer that we are going to get there is going to be 112,243. So this is our asset total. Then for liabilities, we're going to pick the figure for liabilities also. So you see that liabilities that we have got accrued expense and creditors. So this is and then we also have loan here. So you're going to say 8,000 plus 1,126 plus let's try to see for liabilities. We are saying 8,000 plus 1,126 plus 7,608. So we just go and summarize as such. So we are saying 8,000 plus 1,126 plus 7,680. And the total that you are supposed to get there is 16,806. Then we employ the formula that says capital is equals to assets minus liability. So we are saying your total for assets was 112,243. And then you subtract total for liabilities 16,806. And then the answer that you're supposed to get there, you're supposed to get your 95,437. So now this represents our closing capital. So now we go to the statement of changes in equity. We go to the statement of changes in equity. So this is our statement of changes in equity that we are going to use to calculate our net profit. So we're going to calculate this figure. Opening capital, the figure that we got for opening capital is 82,000. That is balance at the beginning of the year. We got 82. So we're going to say 82,000 here. Then the figure for net profit is the one that we are looking for. Then for drawings again, we go and check in the information in the question that bearing in mind that he had withdrawn 4,200 during the year. So this is the figure for drawings that we have. We are saying 4,200. And remember, we give a description of saying less here, so we are subtracting. So we are subtracting. So if we do that, if we say this one plus net profit less drawings, we get your closing capital. But we do not have our net profit, but we are given the closing capital. We've calculated it and we got 95,437. So here we've got 95,437. So as simple as that. So to get this figure, you can just maybe present it in the formula so that it becomes simple for you. Remember, we're saying closing capital is equals to opening capital and net profit less drawings. So you can just present it as such. So we are saying closing capital is 95,437 equal to opening capital, which is 82,000. And net profits, net profit is the figure that we are looking for. Less drawings, which is 4,200. So we can make net profit some formula by saying net profit is equal to 95,437. We subtract 82,000 and 4,200. We do that for net profit, you're going to get your 17,637. So this is the figure for our net profit. So this is the figure that we're just going to put there. It's 17,000 637. So this is what we have on the calculation of net profit. So you would see that the calculation of net profit, we have used that formula that we put just above, so that we arrive at the, or you can just calculate it within the statement of changes in equity, whereby you are just saying if you say this one plus this one minus this one, you get this one. So to get this one, obviously we're going to say this one minus this one plus this one, so that you get this one. Simple as that. So this is the statement of changes in equity. So let's meet again in the next video on the preparation of the balance sheet. As for this video, we are finished, and let's subscribe and share. Let's share the link and keep updated on the videos to come as we prepare for exams. As for this video, I'm out. We'll meet again.